Morning, Steve Freed in Chicago with the morning grain comments. Well, it's the day after the USDA crop report, and when you look at many of the analysts' reports overnight, there's a common theme in all three of the commodities. First of all, overnight prices are lower. Beans down about 15 cents, corn down anywhere from 5 to 6 cents, and wheat down about 7 cents. Generally, just some profit taking after yesterday's big gains. In the beans, I think the market was impressed that the USDA raised demand and offset the higher crop. Most people are looking for a little bit bigger final crop, but the fact that the USDA is estimating pod weight at a record high for the last 10 years suggests that maybe the crop won't get that much bigger. The USDA raised U.S. soybean exports, raised China imports, and lowered exports old crop out of Brazil and Argentina, suggesting that we'll have a bigger share of that. That probably should support the market. Most analysts have a trading range right now in beans from 15 to 16.25. Over in the corn, I think the market thinks that we're going to see just a little bit lower corn crop, and that the demand is still pretty impressive, even though it's the largest year-on-year drop in corn demand in the United States ever. So are prices high enough to ration that much demand? Could see some old crop prices like March and May and even July corn gain on new crop. As far as wheat is concerned, it didn't really change too much. Wheat will probably follow the corn market and be watching global weather, and also be watching exports out of the Black Sea to see if they begin to decline. Does that help our demand here in the United States? Weather-wise, this weekend across the Midwest, and especially in Chicago, we may have the best rain event since November of last year. That doesn't really break the drought, but it certainly is a reminder that it could rain. South American weather conditions, long-range maps suggest better conditions for Brazil, and some people think that fact, and also the fact that funds are still big longs in our markets with economic uncertainty, could limit the upside in markets going over the next few months. Some people have started out looking at 2013, 2014 U.S. corn, soybean, and wheat supply and demand numbers, and they're all bearish. A few more acres, trend yield, good demand, and carryout still grow, which suggests that the 13 new crop contracts for corn, beans, and wheat might be overestimated. So a lot to think about. We're trying to establish trading ranges in this new demand-led market versus this summer supply-led market, and those are always harder to trade than a supply market. As always, these are my thoughts and not those of ADM Investor Services or ADM, and have a safe and profitable trading day.